Mr. Chairman, if and when the committee decides to cut rates, I suspect there'll be a debate over whether to move by 25 or 50 basis points. Indeed, there's a pretty substantial body of academic literature arguing that a central bank close to the zero lower bound ought to act sooner and more aggressively than it otherwise would. I'm wondering what you think of that prescription, and if you could spend a couple of minutes discussing the pros and cons of a 50 basis point cut and how you approach that question.
On the specific question of that, that's just something we haven't really engaged with yet, and it will depend very heavily on incoming data and the evolving risk picture as we move forward. So it would be, so nothing I can say about that is specific to the near-term question that we face. More generally, though, the research you refer to essentially notes that in a world where you are closer to the effective lower bound, it's why research kind of shows this. It's wise to react, for example, to prevent a weakening from turning into a prolonged weakening. In other words, sort of an ounce of prevention is worth a pound of cure. So I think that is a valid way to think about policy in this era. I don't know, and it's always I think it's in the minds of policymakers during this era, because it's well understood to be correct. Again, I don't know what that means in terms of the size of a particular rate cut going forward. That's going to depend heavily upon the actual data and the evolving risk picture.
Hey, Donna. Donna Borak with CNN. Thanks, Chairman Powell. Democratic presidential candidate Elizabeth Warren has provided a proposal to revalue the U.S. dollar in order to address concerns about rising trade deficits. The president himself has routinely complained about the strength of the U.S. dollar, saying it has resulted in, quote, tremendous, close quote, competitive advantage with countries like China and others. Do you think that an overvalued dollar has been a drag on America's global competitiveness, and would you support an intervention of some kind on this issue?
The U.S. Treasury has responsibility for exchange rate policy, not the Fed, and we don't comment in that sense on the level of the dollar. We have the responsibility for maximum employment and stable prices, and we use our tools to achieve that. Of course, we do that through changing financial conditions, and one of those is the dollar, but we don't target the dollar. It's just something that we don't do. In fact, central banks, or rather nations, when they get together, routinely adopt a communique that says we will target our domestic economic and financial conditions and not our exchange rate in using monetary policy. And that includes the United States. That includes the G20 communique that we adopted 10 days ago. So I'm not the right person to ask about that sort of dollar policy innovation.